Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing certain problems on the retirement problems, or rather we can talk about retirement of any partner, and how to solve a comprehensive problem will be discussed further. So now that we have understood that retirement includes a lot of things, that means first gaining ratio is supposed to be calculated, then reserves are supposed to be distributed, final payment has to be considered, hidden goodwill has to be figured out, etc, etc. Now let's understand, if all these things come into one specific problem, how to get this illustration solved. So what we'll be doing is that we'll be mentioning an illustration here, and according to that illustration we'll go through the retirement problem step by step. So the question here is stated or mentioned as follows: A and B are partners sharing profit and ratios or profit and loss in the ratio of 3:5 and 2:5. That means 3:2 ratio. The balance sheet details have been also mentioned here for your reference. Capital account of A and B had respectively, A had 20,000, B had 15,000. So the total capital balance was 35,000. Reserves account was 15,000. Make sure you star mark this because this is one of the most important part. Trade payables has been mentioned as 7,500 for your reference. Now on the asset side, we have plant and machinery as 20,000. Inventories at 16,000. Trade receivables at 15,000. Balance at bank 6,000, and cash in hand at 500. So these are the details that have been mentioned as liabilities and assets here for your reference. So these are the differences, or these are the balances that have been mentioned here as. So these are the differences, or rather these are the balances that has been mentioned here as a specification of assets and liabilities. Now let's go further ahead with the sum details. Now the question also states that B retires from the business. We can assume that this was due to illness or owing to illness, and the existing partner A takes over the whole firm. So this has been assumed here. Now let's go ahead with the revaluation details and every other adjustment that has to be taken into consideration here. Now further adjustments have been mentioned here. Let's go through them one by one. Goodwill has been valued at 25,000. We have to depreciate plant and machinery by 7.5% and inventories by 15%. Doubtful debt provision has been created against trade receivables at the rate of 5%. Discount on reserves against trade payables at the rate of 2%. Now we have to pass the journal entries here and show the balance sheet of A. So let's start with the journal entries first. So start with the journal entries first. We have to mention the amount of goodwill that has been adjusted or given to the retiring partner. The valuation of the goodwill is done at 25,000 and B share of that was 2/5. That brings you to the total of 10,000. So 10,000 has to be credited to B's capital and that has to be given by A. Hence, the journal entry here is A's account debit to B's capital account, and the narration here will be the amount of goodwill on 2/5 of share adjusted by A towards giving the same amount to B on retirement. Now the second journal entry refers to being transfer of reserves to their partner's capital. So reserves value stood at 15,000 as mentioned in the balance sheet. That has to be divided as per the agreed profit sharing ratio, that is 3:2 between A and B, which we have done. So 3/5 of 15,000 gives you 9,000 and 2/5 of 15,000 gives you 6,000, which has been identically credited to A's capital and B's capital here. So the entry that has been passed here is reserves account debited to A's capital to B's capital, and the narration here will be being transfer of reserves to the existing partners on retirement. Now the third entry that we have passed here is usage of revaluation account. So revaluation account has been debited, and all those assets which went down because of the revaluation issues, that means like plant and machinery which got depreciated by 7.5%, inventories which got further depreciated again, and the liabilities that were created, that means provision for doubtful debts. All these things have been credited here and revaluation account has been debited. So this is the amount that has been mentioned here. 1,500 for the depreciation on plant and machinery, 2,000 for the depreciation on inventory, 750 for the percentage of provision for doubtful debts that has been created, and the total 4650 has been debited to the revaluation account, which can be also renamed as profit and loss adjustment account. So the entry that has been passed here is revaluation account debit 4650 to plant and machinery, to inventories account, and to valuation, or rather we can say to provision for doubtful debts. Now let's go to the next entry. Now the next entry that refers to is creation of the trade discounts, and that means another liability being created further and revaluation account being debited hereafter. Now as you can say that the reserves for trade discounts, or discounts being something which is created, that means reserves and discount is a benefit for us, hence this is a profit, hence revaluation account has been credited here with an amount of 750, with an amount of 150 here, which has been mentioned in this journal entry. So the entry that will be passed here is reserves that has been created for trade discounts to revaluation account 150%, or rather 150 rupees. Now once this is done, you need to figure out that there is no other changes that is made or supposed to be required in terms of revaluation account. So we need to now figure out whether there is profit or loss. So if we can see, revaluation debit has been also done, revaluation credit has been also done. Just take the total of revaluation debit and see the total of revaluation credit, and accordingly you will figure out whether there is profit or loss. So in this entry, revaluation debit had a total of 4650, revaluation credit had a total of 150. That means there is a loss of 4500 which has been mentioned here. Now this loss which has been mentioned here will be further divided between the existing partners, that is A and B, in the ratio of 3:2. That means 3/5 will be the loss sharing ratio of A and 2/5 will be the loss sharing ratio of B. According to that, we have made the calculations here for 2700 and 1800 respectively. Now in this whole question, there has been no mention that the B has taken this amount. So we'll consider that whatever balance B has will be taken as B's capital loan to the business. That means whatever balance is there in B's capital account will be taken as a loan to the firm. So hence there will be no entry which will be mentioned towards bank being credited here. Now the amount that has to be derived here is how we calculate the B's capital account. How do we calculate it? We have B's capital account being prepared here for your reference. Now the first entry that you have to make here is the existing capital that it had. B had a capital of 15,000 which was mentioned here. Apart from that, the first entry that was placed where B's capital account was credited, that is the goodwill transfer that was done to him. 10,000 worth of that. Next, after that, there were certain reserves that were transferred to him for an amount of 6,000. And after that, B's capital account has been debited only for the revaluation transfer. So the total of capital account of B is 31,000 on the credit side, out of which the debit of 1,800 will be done, and the balance, that is 29,200, will be then taken as B's final amount, which will be either taken out by B or kept as a loan to the firm. So this is how the balance sheet can be prepared using these details. Now let's go ahead and prepare the balance sheet further. Similar to the calculation what we have done for B's capital, we have done the similar calculation for A, where we have figured out that A's capital balance is 16,300. Now using the same scenario, we have figured out A's capital and B's capital worthwhile. So let's go ahead and post the other entries of the balance sheet. So as you can see that we have prepared the balance sheet of A, where the balance sheet total is tallying both for liabilities and asset as 52,850. We have mentioned all the assets and liabilities, and this is how you prepare the balance sheet, including a comprehensive sum of revaluation account when a retiring partner is going out of the firm. So I hope this video gave you a lot of clarity about the illustration problem on revaluation account, usage of goodwill, transfer of reserves, and etc., which is a part of retirement of partner. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.